everybody, it's Jeff Gibby over at MetaStock. I hope you're doing well today. I hope you had a good day in the market. Welcome to tonight's class. Let's go ahead and get started. You guys know what's next. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Awesome. Okay, let's go ahead and get past that. John Carter is somebody that I actually personally have a lot of respect for in the market. We have spent probably the last 6 or 7 months actually developing his squeeze methodologies into MetaStock. And I have to say that a big part of that was people asking for them, people wanting to be able to find them and have it available in MetaStock. So it's been a long process. We've worked really hard on it. A little bit of a special thanks to Jared, who really put up with a lot of questions during the development phase and spent a lot of time making sure everything was correct. But we're done. It's ready. I know a lot of you have already tried it already, and today we just want to do some training to help you understand it and make sure you're using it correctly. And so we've brought John in to basically kind of kick everything off. So John, let's go ahead and get you on here.
Okay, thanks. Well, thanks very much for the introduction. And we'll just kind of dive in here. I know from a trading perspective, as a trader, when I am seeing new information, it's just kind of like, hey, you know what, let's get right to the good stuff. And so that's what I'll do. And so let's just dive right in here. So essentially the goal with this is going to be a quick webinar, show you a core tool that I've been using once I kind of got into the what I would call my consistent trading groove. It kind of came down to one core tool that I started using, and that's what I want to talk about. So our goal here is really understanding why we're doing this in the first place, because, you know, at the end of the day, we are not looking for thrills. You know, we're not looking for excitement. We're looking how to, if we've got a small account, we're looking how to grow that and turn it into a bigger account. And then at some point, we may be satisfied that our account is big enough, and then we're going to focus on creating income. And that's typically the goals of most traders. Either they've got a small account and they want to turn it into a bigger account, or they've got an account that they're satisfied with and they just want to create a consistent income from it. Okay? Now, there are huge problems that are created psychologically by traders that cause them to repeatedly lose money in pursuit of these goals, and part of that is because they just simply don't understand how the markets really work. Okay, so we're just going to dive in and we're going to take a look at that. So in terms of myself, I do actually trade for a living. That's just kind of my first love, my first profession. It's something that's always fascinating to me, and it's great because there's always something going on in the markets. This is my desk. I sit there and I look at intraday data here on the middle screens, and then more end-of-day data at the end screens, and it allows me to look at different aspects of the markets, whether it's stocks, options, or futures. You can also follow me on Twitter, John F. Carter. The first trade I ever placed was in 1987, and I like trading so much, I also show my kids how to trade. This is my, at the time, 4-year-old. I left my computer, and he was placing trades on the yen futures. He actually ended up making 7 ticks, which was great, and he should be well on his way. So the short version of all this is that I've watched the markets for a long, long time, over 25 years now. If you talk about Malcolm Gladwell's 10,000 hours doing something, I've spent over 25,000 hours looking at the markets. And when you do that, after a while, you start to understand some key nuances that can make or break your, essentially your results. And really the concept that I want you to get familiar with is the concept of building up energy. Okay, and in my years of doing this, I found that all markets on all time frames behave exactly the same way. They essentially explode for short periods of time, and then they chop around for 90% of the time. Okay, and this is if you're looking at a 5-minute chart, you're looking at a daily chart, you're looking at a weekly chart, it's the same thing. So if you're a day trader and you're looking at 5-minute charts, most of the time the market's going back and forth, it's not doing very much, but every once in a while it's going to have this nice price explosion, right? Same thing on a weekly chart. If you're an end-of-day trader, you don't want to be watching the markets all day, and you're going to be playing larger time frames like that, guess what? most of the time on a weekly chart, not a lot's going on, but once in a while you see this big price movement either up or down, okay? So those are the areas that I became interested in. And during that chop phase, there is essentially a period of time where the market is building up energy, and at some point it releases that energy, and that's when you have the big move. And I just became very interested in trying to identify that. Because at the end of the day, recognizing momentum is incredibly easy to do in hindsight. And this is one of the things that used to drive me crazy is I would go to classes being taught by instructors, and I was trying to learn how to trade, and they would have these PowerPoint presentations and say, look, of course this was you should have gotten ready for this decline here, as you can see right here, and then you would have covered here, and it just made it sound so easy, but in real time you actually never really knew what was going to happen next. Like, you didn't know exactly if the market was going to go up or down. So as I started watching this and trying to learn from it, and the whole concept of building up energy, I found out through trial and error that it's actually not that difficult to do once you understand the pieces of the puzzle that are involved and how to bring those pieces of the puzzle together to use in kind of a nice, uniform, and consistent way. Instead of identifying these moves after the fact, it's identifying and increasing the probabilities that you're able to get into these situations shortly before that move's going to happen. Okay, so to do that, you need three simple tools. You need the Bollinger Bands, and the Bollinger Bands measure standard deviations. You need the Keltner channels. The Keltner channels measure what's called an average true range. Okay, and the difference between those in terms of a Bollinger Band is more of a mathematical calculation. Here's a 21 period moving average, and it's going to show the bands that are 2 standard deviations away from that to kind of give you an idea of an extreme move. All right. And Keltner channels, on the other hand, will measure average true range, and that is essentially a mathematical calculation that says, hey, you know what, over the last 14 days, this has been the average daily range, and that gives you a number for that. And last but not least, you want a momentum oscillator, okay? So how does this look on a chart? Well, on this chart right here, you can see the blue lines. The blue lines are the Bollinger Bands, and you can see that they contract and expand with the market. So if the price is volatile, the Bollinger Bands are going to expand. If the price is quiet, the Bollinger Bands are going to contract. All right. And where I got interested in were these moments in time where the Bollinger Bands, if you notice, if they contract enough, at some point they stop and essentially kind of explode again. So this is where a market's building up energy. When the Bollinger Bands go back outside of the Keltner channels, that's when that energy has been released, and you can see that that's going to have a sustained move. So again, 90% of the time chopping around, 10% of the time it's having a sustained move. So what I got interested in is, again, after the fact, that's very easy to identify, but how can we put the odds in our favor that we can get into that market while it's being quiet? Okay, well, okay, great. When the Bollinger Bands are inside the Keltner channels, that's the moment in time just before this is going to happen. So the next question with this is that, okay, if that's the case, then what are the odds? How do we know in terms of probabilities if there's a greater probability that this energy is going to be released to the upside or it's going to be released to the downside? All right, so great. This is where we put in a momentum oscillator. So when the Bollinger Bands contract inside of the Keltner channels and momentum is below 0, okay, when this happens, so you can see right here, okay, great, Bollinger Bands inside the Keltner channels. That means that this market is paused, it's quiet, it's building up energy. Which way is that energy going to be released? Well, you come down here and look at the momentum oscillator, and if the momentum oscillator is trending lower, and especially if it's trading below 0, then there's a 90% chance that this market is going to fall, okay? And, of course, vice versa. If you look at this next slide here, here's another chart, and you can see here that, yes, okay, great, Bollinger Bands have contracted to the point where they're trading inside of the Keltner channels, but this time when you're looking at it, momentum's actually above 0 and trending higher, and guess what? When it releases energy, it releases it to the upside. So on something like this, what got me excited about it is that it gave me an edge to where I could easily identify when a market was quiet, okay? And the reason I could easily identify when a market was quiet, because that was going to be triggered by a specific instance of the Bollinger Bands trading inside of the Keltner channels, and you can see that it does not happen very much. So when it does happen, it is something that I want to pay attention to. Okay. Now, I don't know about you guys, but in terms of looking at this chart, after a while, I got a little bug-eyed. It was not visually appealing, and I'm much more visual. I like to see something very quickly. So what we did is just turn this into a more of a histogram-based indicator that took most of the pieces of what you see here and then took some smoothing elements and rolled it into what we call the squeeze. So if you see along here, you're going to see green dot, green dot, green dot, green dot, green dot. Here's a period of red dots, and then we go back to green dot, green dot, green dot. Well, guess what? Anytime you see red dots, that's something that you want to pay attention to. When you see red dots, that means that the Bollinger Bands have contracted to the point where they're now trading inside of the Keltner channels. That's the moment when this energy that's being built up to the point where it can no longer stay contained is about to be released. All right, so that's what I'm looking for. And then from here, I can look at the histogram and say, oh, wow, the histogram is above 0, which means that the momentum is above 0. So that means that the odds are high that when this energy is being released, it's going to go to the upside. So in a perfect world, what happens is I wait for a couple of red dots. I look here, we got the consolidation. We got momentum, histogram above 0. So I could start buying the stock. I could start buying call options. I could start selling puts, i.e. whatever bullish strategies that I like to employ, I can do at this time with the expectation that there's a decent probability that this is going to release some energy in my favor. Okay. So now the next question is, if we look at this, then when do we get out of the trade? Because at the end of the day, it's actually very, very easy to get into a trade, to get into a market, but the reality of it is, it's the exits that make you money. Okay. So you don't want to get into, say, this, and you're like, wow, look at all the money I'm making, and then have it all come all the way back down, and you're not really paying attention to what's going on, right? So in this case, you see kind of the red dots here, the histogram's above 0, and in this case, let's just say it's a stock, we buy it, great, we're in, we're going higher, 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 but we can see here that the momentum here, it's accelerated, but now the momentum starts to roll over, okay? In this case, that's when I would exit the trade. So I'm getting in here, and I'm getting out here. Now, did I sell at the absolute top? No, you can see that this thing kept going higher, but you can see that shortly thereafter it actually fell fairly quickly. What I'm interested in is capturing what I call the meat of the move. Okay, if I can catch 75% of the move, that's great, and I'm completely happy with this. What I don't want to do is be in a situation here where I'm riding this up, I have no plan, it comes down, I continue to hold it, and now over here I'm actually losing money on the trade. Okay, this is a specific strategy where you get some momentum, you get the signal, you're in the trade, you're out of the trade, and you move on to the next one. Okay, now these average signals last 8 to 10 bars, so if you're getting the signal on a daily chart, you're most likely going to be in that trade for 8 to 10 days, give or take. Okay, that gives you some perspective on time. If you're looking at a weekly chart, then you're looking at 8 to 10 weeks. If you get the signal on a monthly chart, 8 to 10 months. And then obviously if it's like a 10-minute chart, then it's going to be 80 minutes to 100 minutes. So, about an hour and a half or so, a little over an hour and a half. So that gives you an idea. It doesn't matter what the time frame is, it's about 8 to 10 bars. So when I'm looking at charts, I actually just take off. I take off the Bollinger Bands, I take off the Keltner channels, I take off the momentum, because now with this indicator I don't need that anymore, and it just makes my life a lot easier. So now I can say, all right, great, here's some red dots, that's fantastic. I know that this thing is building up energy and it's ready to make a move. I can look at the histogram, boom, I can get into the trade. When it starts to lose momentum, I can get out of the trade. And again, it doesn't mean I'm going to be, riding it all the way to its dead highs, but I am going to be catching a nice, high probability chunk of the move. Okay? So that's really what it's all about. It's about patience. It's about waiting for these types of setups in my mind so that I can take advantage of the energy that's coming out of these markets, just like we saw in some of those examples. And these are kind of setups where it kind of comes together. You might hear of a stock like Tesla, and Tesla's, it's a volatile stock, it's on the move, great. You know what? I'm not going to trade it unless I see a squeeze. When I see those red dots, I know that Tesla is getting ready to release some energy. I know that I'm going to have a higher probability of making money as opposed to just buying the stock because I heard it on CNBC or read about it in Yahoo. Nothing against them. It's just that they may be mentioning a stock based on some news that actually has nothing to do with a nice, high probability technical setup. Okay? So that's kind of the setup where it comes together, we're patient for it, and we go from there. And I kind of joke it beats working for a living, but at the end of the day, and this is what my trading mentor taught me, is that if you don't have patience, trading is very, very difficult, and that's the trading gene that's missing in most people. What's nice about this indicator is that it forces you to be patient because you have to wait for that specific signal, okay? And so the biggest question I always get is, okay, that's great, John, how do I become more disciplined? And it's actually very simple. You've got to make a commitment to yourself. And that commitment to yourself is to start acting more like a professional trader on your next trade, okay? You don't need years and years and years. It's one of the biggest things that you can do is be patient. This indicator forces you to be patient. So if you've gotten yourself into trades that are kind of a mess, do yourself a favor, close them out, redeploy that capital towards a high probability setup, be patient, and wait for it to come down the pipeline, okay? There is no magic cure for the discretionary trader. The bottom line is you have to be patient. You've got to work it on every trade. If you don't, it's going to be difficult for you. Now, if you've got some issues and if you've got a larger account, great. You can hire someone to take the trades for you and manage your impulses. Basically telling them, like, hey, you know what? Your job was to follow the plan and ignore anything else I tell you to do, even if I scream at you. But the bottom line is if you don't have a big account and you can't afford to hire someone to do it, then you need to take responsibility and do that yourself. Okay? Follow the plan and ignore anything else that the markets are throwing at you. Okay? And at the end of the day, you've got to have trading rules, and you got to follow the rules. And I always like to joke that the rules may be stupid, arbitrary, and irritating, but God help you if you break them. Okay? So that's what I got. It's a quick, kind of an easy indicator. That's a quick presentation on how to use it. And at this point, Jeff, I believe you wanted to go through and kind of show some of the tools that you can use on MetaStock, which is, by the way, the first charting platform I ever used. So that you can actually scan for these and find them on your own. And Jeff, I can turn this back over to you.
All right. Yeah, I definitely want to show you kind of some of the integrations we've put together. It's working really, really good, and I want to just make sure everybody understands how to use it. So we're going to spend about 5 or 10 minutes on that. As John was saying, it's very, very easy to use, very simple to understand, and it works really, really well. The first thing I really want to kind of talk to you a little bit about is the scans that are involved, and how the scans work and how you run them. And if you know how to run a scan in MetaStock, these are going to be really, really simple. So let me go ahead and open up our Power Console here. I'm going to go down to the ST scans that are available. And now, I actually, based on the feedback I got, I wrote another scan that's kind of come out after the product launches. So I'm going to give this one to you. I actually just barely wrote it today. It links in with the DLL and the technologies that we've got. But I'll tell you about that one in just a second. It was based on some feedback that we got. I had a user that called me up and said, well, why don't you tell us when the stocks are actually exiting that squeeze pattern? I'm like, well, that's a great idea. We could easily do that. So that's what we call the bonus squeeze. I'm going to talk about that one last. The pre-filter squeeze, the ST pre-filter exploration, that's designed to be run maybe once every 3 months or so, once every quarter or so. What it's going to do is it's going to go through and identify the stocks in your list, or in any list, that have the average volume of 200,000 and are over $20. That's all it does. So what it's doing is it's set up to be a pre-filter scan. It's a list builder, basically. And the reason we kind of put that separate from the product, there's 2 reasons. As you know, a lot of you are international. You're trading in Singapore, and maybe $20 doesn't make a lot of sense in Singapore. Maybe it needs to be higher or lower, or in India or in Australia. So we put together a pre-filter for those of you that are in the US, and that basically says, okay, to run it, what you're going to do, it runs just like any MetaStock scan. You just click on pre-filter right here, and then you'll come down and you'll select the in this case, I ran it against the optionable stocks, all 4,300 of them. But you run it against the market that you want to follow. When you get that report back, this is the way it's going to look. It's basically, I ran this back in May, and it's just going to give you a list of the stocks that pass that filter. So in this case, I'm just making a list of the stocks that have liquidity or above $200,000 and above $8. That's it. Once this list comes back, I'm going to go ahead and click on the button that says Save List here. Okay, and I've already done this, but what you'll do is you come in here and you'll make, in this case I named it ST Pre-Filter. For you to kind of create this, all you do is click on Create New, and you call it ST Pre-Filter, and then you can date it or whatever you want to. Since I've already got that list, I'm going to go ahead and leave it there. So now I've got this ST Pre-Filter. It has about 1,900 stocks in it. I'm going to go ahead and click on Cancel. And the other reason that we have a pre-filter list is now, instead of looking at 4,293 stocks every day, we're only looking at 1,900. So our scans are going to run roughly about twice as fast. Okay. In this particular case, on a daily basis, you could either decide to run the ST Squeeze exploration, and that's designed to kind of give you a list of all of the stocks that are in a squeeze pattern. It'll basically, in the first column, it's going to tell you, allow you to rank based on the squeeze indicator value, and column B lists how long the squeeze has been active. So I've run this already today. Let me go ahead and go to the report here. And all the stocks that are rejected are not currently in a squeeze pattern. Okay, and this will give you actually the value of the momentum indicator, I believe, and this will tell you how long it's been in the squeeze. So if you want to see things that have been coiling up for a long time, in this particular case, our biggest example, GE has been in a squeeze for 29 days. So then you could, of course, go in and look at GE and kind of wait for that breakout to occur. The bonus exploration that I'm going to give you for signing up, basically, what it's going to do is it's called the bonus squeeze exit. And like I said, I just wrote it based on some feedback that I got. But it's going to look for stocks that are in a squeeze yesterday and they're no longer in a squeeze pattern. In other words, they've broken out of that spring, so to speak. Okay, and to run this on a daily basis, you'll just click ST bonus squeeze exit. And then the lists that you want to run it against. So I wouldn't run this against my whole list of stocks. What I'm going to do is I'm going to come down and say run it against the pre-filtered stocks, that list that we just saved. Okay, and the report, what is on this report is this will just list out the stocks that were in a squeeze yesterday and are not in a squeeze today. So these are all potential buying opportunities for us. We could save this to another list if we wanted to. And but these are basically going to be the stocks that have currently broken out of that squeeze pattern. Okay, and this is actually how I found this general dynamics today. You'll notice we did a scan. This was the first one that I looked at, and it's been in a squeeze pattern up until yesterday. Was in there for a couple of weeks, and it's broken out of that pattern today. So it's super easy to use. Of course, we do have, for those of you that are aware, we do have commentary that comes into play in our expert advisors. So if I I need to attach the expert advisor. So if I want to kind of see what some of these definitions that John was talking about, like momentum, or if I just want a summary of what's going on the chart, I can come into the expert advisor here. And we'll go ahead and open that up. And under the ST, we're going to have one that's called the ST Squeeze. I'm going to go ahead and attach that to the chart and click on Close. Okay. Now this ribbon you can turn on, but I'm not going to show you. But basically, it just outlines the same thing that this little ribbon is showing down below. I was turning it on to make sure that it matched when I was building the Expert Advisor scan. We can come in here. I'm going to go ahead and open up my commentary dialog box. And for those of you that are not maybe as familiar as MetaStock, all you do is you just right-click on here and go to Properties. And what it's going to do, not Properties, I'm sorry, wrong place. I'm going to go to Expert Advisor and click on Commentary. And what this is going to do, I'm just going to go ahead and make this a little bit larger. And I'm going to dock it over here to the side so we can kind of read it. In this case, it's going to tell us the squeeze pattern has just ended. GD appears to be entering a bullish phase. Traders looking to advantage of this should buy the stock in the direction of the propelling trend. We also define what the momentum is doing. The momentum for GD appears to be bullish and increasing. So in this case, we've broken up to the top side from out of our long position, and we could look to take a 7 or 8 day trade off of this particular trade, as John was just mentioning. Ideally, traders will want to enter a long trade when a squeeze is ending and the bullish momentum is rising. Conversely, traders will want to enter a short trade when a squeeze is ending and the bearish momentum is increasing. So it kind of breaks everything down for you, tells you a little bit about John. It's a very very good system for kind of helping you understand what's going on with the trade and that kind of stuff. I really appreciate, like I said before, I really appreciate the time that John and particularly Jared. Jared was a rock star. Jared Anderson over at Simpler Options in terms of getting this pulled together. A couple of questions that come in. I've used TTM and it's made me a lot of money. I use it with Ichimoku Cloud, ADMX, ADMI. Thanks for a great show. Thanks for coming, Gary. Thanks for the thing. Scott says, can you show us how the bonus squeeze exit works and show report? Yeah, okay, sure. I'll absolutely talk about that. I thought I did, but basically the bonus squeeze is something I put together. I'm going to have to send it to you. I just barely built it today because I was thinking, okay, well, people are going to be able to want to find stocks that they can take action on. Okay, and what it's basically going to do is it's looking for stocks that were in a squeeze pattern yesterday. If you run it on a daily basis and are no longer in a squeeze pattern today, so they've broken out of their kind of consolidation, that spring has started to collapse. That's what it's looking to do, and it's just going to give you a list again of the stocks that have kind of exited that pattern. Scott says the bonus sounds good. Yeah, it does. Dennis asks, does it work on MetaStock 11? It's MetaStock 14 and higher. So you'll definitely want to get an upgrade. They have a really good promotion on that. You can call and talk to our sales guys about the bonus offer. So that's kind of the product in a nutshell. Let's go ahead and go back into kind of that PowerPoint, and we can skip a bunch of slides because I kind of showed you a lot, or John and I already kind of talked a lot about what was available for it. Let's go ahead and kind of, again, we have the pre-filter explorations, the squeeze explorations, and now the bonus ST squeeze, which I'll send you separately. You want to order by Friday so that you get on my list to send that to. Okay, we do have the expert advisor, the commentary, everything's kind of perfect. They did a great job of testing it over there. The ST squeeze system comes with all the indicators, the 3 different scans, and it's just $49 a month. And not only that, you can get a free trial of the system at metastock.com/simpleroptions-A. And again, you want to order by Friday because on Monday we're going to come in and pull up the list and send out that bonus exploration that finds the stocks that have actually triggered into the squeeze. John asked a question. It's a really good question. Can you change the price of the pre-filter and the volume of the pre-filter? I don't believe you can because it is a password protected and it's locked to the DLL, John. But it's actually very, very easy to go in and set up that pre-filter exploration. In fact, I think I just recorded a video 2 or 3 weeks ago that shows how to set up a pre-filter exploration. So if you want to email me, I'll send you a copy of that. It's super easy to do, and I'll walk you through. Here's how you define what price you want, and here's how you define exactly what volume you want. So just send me a message. I'll send that little video over to you, or I'll just send you some code and some instructions on how to implement it, depending on which is easier for me to do. Okay? If you guys have questions, drop me a message. Oh, I just sent that privately. If you guys do have, let me go ahead and send that again to everybody. Send to all. Okay. Bruce asked a question that's really good. how do you set up the histogram? That's a great question, Bruce. I really appreciate it. Let me go back into the software real quick, and everything's kind of pre-configured for you. So if you have the program, if you just apply the template, that's going to attach all of the indicators and have it all set up for you. So in this case, I'm going to go ahead and look at diamonds. I'm kind of curious to see how my positions are doing. Anyway, I'll come down to the ST. Here we go, the ST squeeze exploration. I'm going to apply that as a template. And you'll notice, I'm just going to go ahead and close this commentary window, but you'll notice it's already set up for you. So all you really need to do is apply the template. And it's going to have the momentum set up for you, as well as the histogram, as well as the ribbon on the bottom of it. Per asked a question that I'm glad Daryl actually answered. The momentum is a 14 period. And that's what John has found is his sweet spot. I'm glad you answered that, because I was going to say, I don't know in terms of the answer. It's been a while since I kind of dressed up the code, and I've actually turned it over to a programmer to handle some issues with it. And I haven't looked at it for several months. William says, this works exceptionally well with futures. It's the main thing John was trading when he developed it, the S&P minis. Great. I wonder if that applies well to options on ETFs as well, like the Dow mini and the or the Dow options. I'm sure it does if it's 7 to 8 days. I'm going to have a look at it. And then a comment, it's actually $59 a month. So my PowerPoint was incorrect. I actually, I'm sorry about that. It's $59 a month. Okay, all right. So go ahead and give it a try. It's metastock.com/candlestickforuma. And appreciate you guys coming, and we'll see you at the next one.